Yeah, so at your core, you're value investors. When you look at a tin company, and like I'll use uranium as an example. You said it was kind of a slow burn for that to be recognized on Wall Street. Once it is recognized, though, how do you determine when it's too much, and what are the valuation metrics that you look at?
Sure. Well, I mean, at the heart, it's really simple economics of what these commodities, where the prices should be. We think it's just the necessary price level to balance supply and demand. If the price is too low, not enough companies will make money, and they won't be able to supply whatever level of demand there is. If the price is too high, it naturally invites new competitors in, and they, will beat the price back down. And so, given what expected levels of demand are, and what the current universe of projects that are out there, what their cost structures are, we get a pretty good range of what we think is the necessary price to balance these markets. And so we can use that range of price levels to really look at what sort of cash flows and earnings these mines and different assets can generate. And that gives us our estimate of what the intrinsic value is. And a lot of times we're investing in things where the current price is below what we would view as the market clearing price. And so there's various reasons why a commodity can trade below the cost of production, but it happens. And uranium was a great example of that. We think tin is a current example of that. And so in our view, just to match supply and demand, we think the price needs to rise, in some cases substantially. And then we look at what the value of these companies are based on, that sort of price level. And in many cases, the things we find are severely undervalued. And a lot of times it's just because there's a lack of awareness. No one's really following these things. They're very small niche industries. A lot of the larger pools of capital aren't able to tap into these. It's just too small for them. But for a boutique manager our size, it's right in our wheelhouse. I think that's how we're able to find some of these things that really do have the exceptional return potential. And yeah, a lot of times it is a bit of a slow burn. You're just really waiting for the rest of the investment community to do the same sort of work, the same sort of math that we've done. And like we saw in uranium the last few years, you'll often get a pretty big re-rate when people realize how substantially undervalued these companies are.